Good morning again, everyone. Welcome to Q2 earnings call for December 31st, 2023. I am Ryan Landy, Assistant Vice President in the Investment Management Unit, and will be guided by Jason Morris, the Chief Investment Officer of SYGNUS Capital, through this presentation. Please be reminded that subsequent to this call, the recording will be available on SYGNUS's website, and the information presented here should be read in conjunction with the information published on the JSE. Jason, over to you.
Hi, good morning, everyone. I hope you all had a fantabulous Valentine's Day. And some of you may still be celebrating. I'm not sure, right? But yeah. So let's jump into the Q2 6-month earnings calls for SCI. I want to start off by just giving some background to the performance over the 6 months. Ryan, I'm not seeing the slide, the first slide. Okay, until that technical difficulty seems to get worked out. So turning to the first slide, some major half-year highlights for SCI. There were some major milestones that were achieved. The first one is that SCI would have, reported a record performance for Q2, the second quarter. Although the 6-month period would still, been affected by what happened during Q1, September 2023. So looking specifically at Q2, we would have had record net profits, driven by record core revenues, record net investment income, and of course, record fee income. And we would have communicated with shareholders on a previous earnings call that we are strategically focusing on increasing complementary income to net interest income in order to get earnings per share up. And we have indicated at the time that our generalized target is for us to get to beyond 20% in terms of fee income being at least 20% of total investment income. So that's something that we would have communicated, I believe, maybe 2 or 3 quarters ago. 2 quarters ago, well, 3 quarters ago, we would have said that we wanted to start this. And so we start to see the first fruit of that being born, and I go through that later in the report. As for St Financial Corporation in Puerto Rico, the Puerto Rico business, that business would have generated record net profits both for the 6-month period and for the quarter. They would have also had record originations for the 6-month period and record deployment for the 6-month period. So that business is really going good. Yeah, if you recall, the entire reorganization and the full integration of the business would have occurred effectively July 1 of 2023, right? Or the end of the last day of the financial year of SCI, June 2023 / July 1, 2023, right? So the company now has the same reporting time frame and everything in stream. So this is basically the first 6 months of that company operating on the same schedule as SCI, with a pure private credit balance sheet, meaning there are no employees in it. It's just a pure private credit finance and operation. In keeping with that, SCI would have also increased its stake in the company to 95.6%, adding an additional $3 million of investment in the company. And I'll go through that later. Third milestone I want to speak about, which everybody already, well, most persons if you are from Jamaica, would know about, is the capital raise, which we did in December. And that, of course, the actual completed figures would be a record $50.4 million US dollars equivalent, which would be the largest capital raise in the history of SCI. And in fact, I think it was also the largest capital raise, a public capital raise, and a JC for all of 2023. So we thank shareholders and investors for that. And fourth item is dividends during the quarter and the 6-month period. SCI would have, of course, paid to shareholders a record 1.6 million in dividends, in keeping with our strategy to, in steady state, get that dividend yield up as the company is growing from strength to strength. And finally, but certainly by no means least, the overall private credit platform / private credit portfolio that SCI effectively has control of. So, assets under management would have crossed the $250 million barrier at the end of December, with most of that being SCI proper, but the Puerto Rico business also, coming to a new record during the period. So combined, when you take SCI's portfolio and you take the AUM that's in Puerto Rico under SCI specifically, the AUM combined has exceeded $250 million for the first time in the SCI's history. So that's another milestone for the company to celebrate. And of course, over the 6-month period, combined, Puerto Rico business, SCI, English speaking Caribbean business would have had a total of $50 million in deployment over the period, which is a very, very good deployment over that period. But as we speak, based on the undrawn commitments that existed at the end of the period, that number, that achievement could be superseded in upcoming period if all of the undrawn commitments are actually funded between January 1st, 2023 and say the end of March, heading into the last quarter. And I'll give some more insight in that later. All right, so into the performance for the quarter, and specifically, I spoke about the fact that the quarter itself would have generated new records at almost every level. So net profits 1.53 million, up a decent 24.6%. Total investment income at 2.5 million, up 10.5%. Net investment income 1.5 million, up 18.5%. And all of these are new records. And EPS was 0.26 US cents versus 0.21. And of course, I spoke about the dividend, 1.6 million versus 1.55. Now, as I said before, net interest income performed really well for the quarter, up 21.3% to a new record. And of course, fee income, participation and commitment fee income, increased to a new record. And currently that's 8.4% of total investment income. We have just started this process, as I would have spoken about, I think, 2 quarters ago. And our medium-term strategy, as I said before, is to get this above 20%. So, we are pushing very hard as we move quarter by quarter to see improvement in fee income, both in nominal terms, but most importantly as a percentage of total investment income. Of course, in terms of dividends, the SCI's board will be convening a meeting of the directors tomorrow to consider an interim dividend if they see fit, as per usual. Moving on to the 6-month performance highlights, net profit. So the entire performance of the 6 months looks, different from what the quarter was. And of course, this is being driven by the Q1 results, and I'll explain this in a little bit. So during Q1, we would have had an unrealized loss of 539.7 thousand on the Puerto Rico Credit Fund, based on the value that was derived from SCI investment in the PRCF, which is not consolidated all the way up to SCI, because the investment does not meet all three criteria based on the accounting standards to be consolidated. So we have to do a kind of fair valuation of it. Now, during the September period, interest rates were pretty high, and therefore the methodology used to do the valuation meant that the price or the value of the investment went down relative to where it started at the start of the financial year. As I would have opined on at AGM, and I'm opining here again, rates would have been a bit more favorable in the December period. So for the quarter, would have registered a gain, but the gain that was registered was 102.3 thousand. So when you take the 539 from Q1, which is an unrealized loss, and the 102.3 for Q2, you add them together, you get 437.3 as an unrealized loss. So we have not made up completely for the unrealized loss, right? But we are not worried about the gyrations that we are seeing. As I said before, the full integration of PR into SCI is just 6 months old now, and therefore the trajectory of profitability that the company is generating, over time, we expect that the movement in market multiples won't be enough to offset the increase in the book value that we're getting from the rise in net profit. But because we have just started, the movement in the market multiples is a little bit outside, because in fact the company actually had a record performance for both the quarter and the 6 month period, and it also had a record deployment. I need to state that very categorically. It's not that the company is making losses, right? Yeah, so we are happy about the performance of Puerto Rico and the Puerto Rico team, which celebrated the 20th anniversary during during the fourth quarter. So we need to give them some kudos. So net profits for the 6 month period, because of what I just explained, would have been impacted with it being at 2.28 million, down 20.3%. Total investment income, was 4.15 million, down 8.6%. And I just need to highlight that net investment income for the 6 month period was actually a new record. It was actually up 28.2%. So that's a stunning performance for net investment income. If you look, and I'll show you on the next slide what I mean by Puerto Rico, the movement in market multiples substantially affecting the Puerto Rico credit fund investment income. Because if you take an unrealized loss of 437.3 and you look at what the figure was last year, which was a gain of over $1 million, because the number is negative, right? You're literally doubling up the gap, because you have $1 million positive and then you have 437,000 negative. That's like 1.5 million gap to make up, and net investment interest income simply could make up all of that gap in one quarter. But as I said before, we're not worried about Puerto Rico. As we go through various quarters, the performance of the firm will overcome the challenge that we're currently seeing. So net investment income, 2.06 million, down 22.5% because of the aforementioned reasons. Earnings per share, 0.39 US cents versus 0.48 last year. And the actual dividend per share that was paid in October was 0.00272 US cents versus 0.00262 US cents. And of course, that was based on the record dividend that I've already paid. Now, to walk you through very briefly what I meant, on this slide where I'm showing the summary result of operations, you can see where net interest income, the steady record of net interest income of 2.18 million versus 1.799 million for the quarter, and also for the 6 month period, you're seeing where net interest income, as highlighted on the chart, achieve a new record, right? So there's no problem with the growth of the company in terms of its fundamental, hardcore cash earning potential. And bear in mind as well that interest expense that is being shown here includes the financing for the acquisition of Accrescent, with no attendant interest income flowing in from Accrescent, because Accrescent is not consolidated in the financial statement. And that's the reason why where you see the Puerto Rico Credit Fund investment income showing that unrealized loss for the 6 months, why I'm saying that pretty much the 6-month results would have knocked over a new record were it not for what happened during Q1, which as I explained on the previous slide. So you can see the gap for the 6-month period where last year 1.14 million versus unrealized after 437K. That gap is effectively 1.5 million, right? And the gap in net interest income would have been $1 million bigger than last year, but as you can see, we can't make up that gap in one single quarter. But as I said before, we're not worried. And of course, you look at participation and commitment fees, you see that last year, 33,000 versus 272 for the 6 months, similar for the quarter, very strong up performance. And if I venture to say that we expect that a continuation of this trend in Q3. And if you look at the financial year, for all of last year, we made 379K in those fees. And based on the trajectory that we are on, we would expect to be on a good path to beat that. So, I mean, that's what I just wanted to highlight, because I know that people may have questions about Puerto Rico Credit Fund investment income or be confused. I think there was actually a report somewhere saying that we have not fully accounted for the acquisition in Puerto Rico. That is actually a blatantly false statement. As you can see, every single financial reporting period since we did the acquisition, we have put the asset on the balance sheet. Our auditors have audited the company twice, audited SCI's financial report twice, and in all the audited financial statements, it is there. And the impact of it flowing through on the income statement has been there every single quarter since the acquisition. So that was very poor reporting, and whoever did that reporting. Just wanted to highlight that specifically in case anyone on this call is confused about that. I have questions on it, which I can take in the Q&A as well. Moving on to the next slide, in terms of efficiency and management expense ratios, we typically report this on a year-to-date basis. So you can see that for the 6-month period ending Q2 2023, the efficiency ratio is out of whack, so to speak. We are at 50.4%, and our target threshold is 40%. Of course, all of this would have been driven by what happened during Q1, because our core income or total investment income would have been severely impacted by the unrealized, by what happened with the PRCF, right? Of course, if we measure just the second quarter alone by itself, we are bang within the 40% threshold. So for the quarter, Q2 quarter, which is October 1 to December 31st, the efficiency ratio was actually 39.3%. But obviously, despite the fact that we have that unrealized loss position on the Puerto Rico Credit Fund, right? But obviously, in Q1, we would have been way out of the threshold because of what happened during Q1. So we are plugging away at making up the gap over the next 2 quarters. As for our management expense ratio, which is also perhaps even more important, which is taking how much dollar of expenses are, how much dollar of assets under management are being driven through expenses, which means this is money that can be utilized to either reinvest in new investments or to pay out as dividends or to buy back shares, right? You can see that this year is well within the threshold of 2.85% at 2% versus 2.4% last year. And so, we continue to manage the company according to international best practice as far as expenses go to ensure that we run a tight ship. Quickly on the balance sheet, shareholders' equity up to 70.5 million. I think this should be a new record for shareholders' equity, up 2.5% versus 68.8 million last year. And for total assets, the balance sheet is now at a record 206.6 million, up 34.5% versus last year. Of course, the balance sheet would have grown substantially during the quarter because of the record capital raise that would have been completed right at the end of the quarter in December. On the next slide, in terms of what we're looking at on the balance sheet and the metrics that we use to ensure that we are monitoring the performance of the company. So making profit is one thing, but you also have to pay attention to the structure and nature of your financing and your leverage levels, etc. So debt to total assets fell to 0.18%, and all of these ratios, of course, would have been impacted by the capital raise in December. Asset coverage ratio was now 2.55 times, well over the 1.5 times threshold target, and the adjusted net debt to equity ratio, which adjusts for the preference shares that were raised, is now at 0.29 times versus the actual limit of 2 times, and our sweet spot, which is to be at just about 1.25 times. Of course, generally speaking, that SCI has a target margin of making 500 basis point spread, and this is an all-in spread in terms of when you look at the fees that we can generate, which is normally paid up front, as well as the difference between our borrowing cost and the cost that we invest at. We typically want to have about 500 basis points spread between the two. And as we scale the business, obviously the intention is to widen that margin. As I would have mentioned on many occasions, with a much larger platform, we can syndicate large transactions, and when you syndicate transactions, you make upfront fees, and those upfront fees goes directly to the bottom line instantly. You don't have to wait 6 months or a year to earn net interest income on that, right? So that's very important. Now, looking at the portfolio activity for the second quarter, investment in portfolio companies would have increased to a record 156.3 million, up from 136.1 million last year. Of course, this includes 27.4 million in the Puerto Rico Credit Fund. We would have deployed an additional 3 million in the Puerto Rico Credit Fund, as I would have shown on the previous, spoken about earlier. Puerto Rico Credit Fund actually delivered record quarterly and 6-month profit. Of course, I know that people are going to ask me what those numbers are, but I'm not really going to reveal those per se. And would have originated more than 40 million US and deployed just maybe more than 80% of that, right? Think about Puerto Rico being in a 100 million US dollar economy.